Good evening. I'd like to welcome everybody to Rincon Valley Citizens for Democracy at the Arizona Senior Academy, with which we are not affiliated. Okay, we are an independent club. Rincon Valley Citizens for Democracy is a group of citizens in the Rincon Valley, Arizona area, working together to support and preserve our democracy. The views and opinions expressed are those of the individual authors or speakers and do not necessarily reflect the official policy or position of RVCD. Any content presented is for educational and informational purposes only and should not be interpreted as an endorsement by Rincon Valley Citizens for Democracy or any person, group, product, or viewpoint. Rincon Valley Citizens is not affiliated with, supported by, or endorsed by the Arizona Senior Academy. At every meeting, we like to start with the preamble to the Constitution. I was going to say the Declaration of Independence. We could use a little independence right now.
Okay, this is our guiding star, so it's the starting point for all of our meetings. We, the people of the United States, in order to form a more perfect union, ensure domestic tranquility, establish justice, provide for the common defense, promote the general welfare, and secure the blessings of liberty to ourselves and our posterity, do ordain and establish this Constitution for the United States of America.
Okay. Karen, you want to introduce our guest tonight?
Yes, well, tonight we are very much honored to welcome the Pima County Assessor's Office and the Pima County Treasurer's Office, who are going to talk to us about how our taxes are determined and how our taxes are invested and spent. So with that introduction, moving first to the Treasurer's Office, Brian Johnson is the Pima County Treasurer. He's been in Pima County for 25 years. He has 14 years experience in Pima County government, including the Assessor's Office, Finance and Risk Management, and the Arizona State Board of Equalization. He was elected in 2024, and his current term ends in January of 2029. And I will let him introduce the two members of his staff that he brought with him tonight.
Okay, thank you. Okay, yes, my name is Brian Johnson, and I was elected in last November, and I began my term in this January. So it's my first term as county treasurer. And I have with me here tonight Chief Deputy Treasurer Jake Martin and Catherine Micronis, who is a special staff assistant, and she's also an elected member of the Marana Unified School District Governing Board. And we were going to begin with a presentation, or did you want to do our present, or have the assessor go first?
Maybe it makes sense to have the assessor go first.
Okay, great.
Because you spend the money.
Okay, all right.
She collects the money. Okay, so our Pima County assessor is Suzanne Droubie, who unfortunately has come down with COVID. But we are honored to have her chief deputy come tonight to speak with us, Stephanie Oraz. She is a Tucson native. She has 21 years of experience with the assessor's office, including experience with real property, personal property, computer-aided mass appraisal techniques, and the like. And if you would like to introduce
We hot? All right. All right. Good evening, everybody. I have with me Eric Howard, who is our property tax, our tax assembly manager. We have Adriana Castro, who is our director of business services. And then in our audience, we have Jody Kavanaugh, who is our director of litigation, and John Nelson, who is here with us also with the tax assembly group. We have Adriana's going to get a presentation going. I think we'll start with the assessor's office because this is the first part in your property tax life, your life cycle, if you will. And so we're going to talk about what is the value, what are values? This is what determines the portion that you share in the tax burden, right? All right. So first of all, the assessor's office is bound by statute, specifically state statute, section 42. And we're also beholden to the Arizona Department of Revenue as far as we have to go through sales ratio studies. We have to do all sorts of, good Lord. I apologize. Suzanne was very upset that she couldn't be here tonight because she really enjoys public speaking. She actually had rearranged her travel. She had some travel engagements and rearranged them so she could be able or would be able to be here tonight. And today, unfortunately, she did come down with COVID and thought, what would be worse, subjecting you people to COVID or subjecting you guys to me? So here you go. So bear with me, everybody. Okay. So again, coming up with your value by March 1st of every year, we are required to send you a notice of value. And that notice of value is going to contain your full cash value, your limited property value, characteristics. We're going to go focus on residential right now. So that's going to be what's your square footage, what year was it built, what is your legal description, or at least your abbreviated legal description. And so we send that out to every homeowner in Pima County. Again, by March 1st, we like to do it a little bit earlier. At that point, you have 60 days to appeal that value. And I always encourage people because that's the only thing you can appeal, right? You can't appeal your taxes. You can only appeal your full cash value. So it costs you nothing. I always encourage people to do that. So we use 3 approaches to value. With residential properties, we use generally the sales comparisons. So we take 3 years of sales, and those go through a validation process. Again, the Department of Revenue says this is what you can consider to be a good sale. Those go through our appraisers, validate all of those, and then Department of Revenue, they have run sales ratio studies as well as our office. And so that then gets passed on to our CAMA team, our computer-aided mass appraisal team, and they work their computer magic, which I would love to tell you, I did work in that section as a regression modeler. So if you want to be bored with statistical information, please see me afterwards. I'm more than happy to talk about coefficients of dispersion and all fun stuff like that. We want to move on to the next. So I think mass appraisal, again, is we don't do fee appraisal in the assessor's office, right? We can't go, we have 450,000 parcels that we have to value every year. So there's no way that we can individually go parcel by parcel. So we do mass appraisal, and that's, the industry standard. We take all of the information and we essentially try to apply a uniform standard and go ahead and make sure our goal is to make sure that everyone is treated fairly and equitably. All right, so full cash value is synonymous with market value. And that's what, our appraisers go ahead and they take all the characteristics, they look at neighborhoods, they look at economic districts, and they group like properties together. So age, construction type, size, and they determine, the houses in this area. And I think we have a graph on here later that we actually took of this area, so you can look at what median sales prices are like and what we have them valued at over the last 3 years. Limited property value. So this is statutorily set, and that calculation changed in 2015 with Prop 117. Limited property value is the value upon which your taxes are based. And unless you make a change to your property or your parcel, that property or that value will only increase 5% each year. It will never exceed your full cash value. So if your full cash value is $300,000 and your limited property value is $250,000, that $250,000 will increase by 5% each year, but will cap at that $300,000 unless the market drops. And then if that full cash value, which is the value we put on there, comes down to 250,000, that limited property value will also come down. Okay. So I think this is where we start to kind of tie into the tax assembly group, because again, so we send out that notice of value. We say, this is the pot we have to deal with, right? And then going on from there, some tax calculation magic happens. And I think I'm going to let Eric go ahead, but if we can find that graph, I'm going to go over that graph real quick. Just so you guys have an idea of what this area is doing and kind of what we look at from a market analysis standpoint. Again, I didn't know I was speaking until a few hours ago, so please bear with me. I'll have a survey at the end if you guys want to fill that out for me. My boss likes those. All right. So this would be a sample. We have this actually on our website. Our website is a great resource for everybody. And we, Adriana's worked really hard with our own IT department to get that launched, a brand new website this year. It's made it a lot more user-friendly. That's, I think, great feedback that we've been getting. But we have a lot of graphs on there like this. We have one that is like countywide, but I had our CAMA team run this specifically for this area. This is Eco District 19. And I think this goes back all the way to January of 21. And so the orange bars are going to be the median sales price, right? And then you have the little gray line is the median value. So you can see the median value is the value that our office has put on these properties, which you can see is in some cases significantly lower than the median sales price. And then this straight line here is going to be the trend. And so you can see it's a little bit flatter than I think it was in years prior, but it's pretty steady. And there is a slight increase up until August of this year. And I just want a disclaimer, because you'll see these, the market, or I'm sorry, not the median value line looks a little bit lower here. We have not time trended values yet for this year. That is something that our CAMA section is working on now in preparation for the notice that's going to go out early next year. So with that, I'm going to hand this over to Eric so he can continue with his portion of the presentation. And he is a lot funnier than I am. So buckle up. Yeah.
All right, thank you guys, and thank you for having us. I'm going to stand up here because I never get to be on stage, so I'm going to take advantage of this. All right, so in the email that I got from this request, it sounded like you folks want to know how are taxes determined and how are they spent. So we're going to try to cover some of that for you today, as far as how we do this and the whole big picture of this. And then the staff from our treasurer's office here, they're going to fill in their part, so. As far as who we are, what we do, I represent Pima County's tax assembly group. So we are the group that calculates the individual property tax for every property, and we facilitate the creation of the tax statements and the billing of all of that. And there's a lot that goes into that, but we basically have to assemble all that information. So I guess that's why they call us tax assembly. We also have a pretty large customer service aspect of our group. We have a property tax helpline that we take all of your complaints all day long. Feel free to call and complain about your taxes. We're happy to hear it. We have an email account that we get plenty of emails. So we have when you're doing a lot of tax bills like that, we have a very large customer service aspect. So that's part of pretty much what we do. Where do we fit in? So as you heard from our chief deputy assessor, every county has an assessor's office, and assessors are an appraisal office and they value property. And we kind of sit in the middle between the assessor and the county treasurer's office. So the assessor is going to value the property. They're going to hand those values over to us in the tax group. We're going to eventually calculate taxes and produce tax bills. And then our county treasurer staff is going to collect the money and do a variety of things that they'll tell you about. So we kind of are in the middle of this whole thing. We take no responsibility for anything because we're in the middle. We just do the math. So that's my saying. All right, let's hit the next one there. All right, so I put together like an overview of property taxes in Pima County, and this is from our most recent tax calculation. So we just finished the 2025 tax bills. And on the right-hand side there, I got a little narrative, but we did about 474,000 tax bills, created that many tax statements. And the total levy amount was about $1.6 billion, and that's across all taxing authorities. And Pima County's portion of that, I think, is about $610 million of that goes to Pima County coffers. The rest of that money is going to the various taxing authorities that use our tax bill to facilitate their levy. So over here on the left-hand side, we have like a pie chart that just kind of shows you out of all the property tax that was levied, where it goes into what bucket. So you can see Pima County is about 38% of all the property tax this year, a little over a third. School districts are just slightly ahead of that. And then Pima College is 9%. Cities and towns, it's actually just cities. We don't have any towns that levy a property tax here. So that's going to be City of Tucson, City of South Tucson. And then our fire districts are about 9%. And then we have some other smaller districts there. But that's kind of how it breaks out. A lot of times, people call and they think that all that property tax money goes to Pima County, and it doesn't. The county has 4 taxing authorities. They have their primary tax, they have a library district, a flood control district, and their debt service. And that 38% represents the levy for all 4 of those. All right, next one. All right, so I put together just kind of like a high level of our calendar to try to just show you where we fit in and what we do. So as we mentioned just a minute ago, the county assessor is going to value all the property. And every year in December, right around December 20th, they're going to give us the most recent year's assessment roll. So they're going to give everyone a notice of value. You can file an appeal. You can, after all that stuff is worked out, they have their assessment roll done, and now they're going to hand it over to us. And our job is to eventually produce a tax bill out of that. And there's a lot that happens between the time that we get that roll and the time that you get a tax bill in the mail. So the first kind of important thing happens in January. So if we think about December 20th of this year, we're going to get the 2026 assessment roll from the assessor that we are going to do tax bills in September of next year with. So the first thing we're going to do in January is we're going to take all of that property value countywide, and we're going to separate it by taxing authority. So generally speaking, taxing authorities can tax the property that's in their geographic area. So we're in the Vail School District down here. Vail School District can levy a tax against the property in their jurisdiction. What do we have here? The Rincon Valley Fire District, same thing with them. For all the property in their jurisdiction, they can levy a tax. They need to know how much that is. So we separate all that value by taxing authority, and we notify them all, here's how much value you have to tax. So that way, when they go setting their budgets and deciding what their tax revenue, their levy is going to be, they know what they know what value they have. So if they know what their valuation is, then they can determine what their tax rate's going to be that they're going to tax with. So there's a lot of things that happen between January and June, but June 1st kind of kicks off our official tax season. So June 1st, we're going to send out an official request to all the taxing authorities. We're going to ask them for their tax information. So we're going to ask for that back maybe by the end of July. And so we're going to, all the fire districts, school districts, every taxing authority, whether they levy a tax or not, if they have the authority to, we're going to send them a notification, and we're going to give them an opportunity to levy a property tax. And so during June and July, we're going to be getting that information back, and we're going to be keying that in our system that we're going to use to eventually calculate property taxes. So kind of June and July, we're getting all that information back. We don't do a lot of policing in our business as far as the property tax. We police certain things from the jurisdiction. So some of them are under limitations as far as how much they can levy or their maximum tax rate. We will police certain things that we are aware of that are known. We've never had anybody try to levy something more than they were allowed, but we do keep an eye on that as well. So we fast forward to the 3rd Monday in August. That's when our County Board of Supervisors will meet and officially adopt those tax rates and levies. That's a statutory duty, and they also authorize the levy and collection of taxes. So that is a key moment in our group, because that basically gives us the green light to start calculating taxes and preparing tax statements that are going to go out to the mail that all of you folks get and you love to open every year. So that's kind of what gets our whole season going there. And the end goal is September to produce tax statements. We send out tax statements every September. We send them out in a couple of batches, three different batches about a week apart. For certain reasons, one of the reasons is it helps with the phone calls, but there's other reasons as well. But 474,000 at once, that's a lot of phone calls. But that's kind of our timeline from the time we get the assessment roll to the time that we do a tax bill. All right, so I put together a couple things here, depending on how much you want to learn, but this is kind of going to lead into my other slide. We'll get into a little bit of the math, but this is primary versus non-primary residents. And some of you are aware that there's a difference tax-wise, and some of you may not be, but if you are a primary residence in Arizona, you pay a reduced amount of school district primary tax. So that is known as the state aid to education. It's a rebate, people call it a credit. But basically, you will pay less school district primary tax if you are a primary residence than if you are a non-primary. That amount is generally capped at $600. There are some exclusions, but we'll just stay with the generalities today. It must be owner occupied as the owner's main residence, or it can be occupied by a qualifying family member. So if you are a non-primary residence, you do not get that credit and you pay the full school district tax, primary tax. So the average countywide is probably about $300. It's not a huge thing. It's based on the value of the property is the calculation. So there are higher value properties that will get the full $600 cap, but countywide on average about $300 difference. But something to keep in mind, if you are not aware of what you are, a primary or a non-primary residence officially, you can check the county assessor's public website. You can call any of us and we'll look it up. But there is a tax benefit for that. So it's something to keep an eye out for. All right, this one we're getting in the weeds on this one, and I don't know how much you want to learn about taxes, but the email said you wanted to see how they're developed. So we're going to try to just do a little bit on this, and I'm going to make sure that everyone has this PowerPoint in case you want to come back for those of you who like math and you just want to do all the calculations. But I wanted to make sure that we at least included some information on how we do this and how the math works out. So up here on the top right, these are all the taxing authorities from this area where we're standing here right now. So these are all the people that levy a tax. Pima County has 4 of them. They're bolded, a little bit hard to see, but Pima County has 4 taxing authorities. Then we've got the Vail School District, unique to this area, the Rincon Valley Fire District. And what that shows up there is the tax rate associated with each of those taxing authorities. So that's the information that they give me. I don't make that up. I don't determine that. I have no influence in that. When we reach out to these taxing authorities and say, give us your tax information, that's what they provide to us. And that's what we're going to use to do the math. So what I tried to put together is just a little scenario of kind of how the math is done. So the Chief Deputy Assessor, Stephanie, that talked to you a minute ago, mentioned the limited property value. So over here, this is kind of a screenshot from my internal system that I tried to put together, and highlighted in yellow there, it says limited, and then there's a limited value of $260,206. That's the basis for property taxes for the majority of properties, where again, we're going to stick with the generalities. So if we want to recreate this Pima County primary, $1,091, this is kind of what I put together, shows you how to do that. And you guys will all make sure you get a copy of this in case you're interested. But in order to just recreate the math, it's pretty simple. It's the limited property value times 10%, which is the assessment ratio for residential property. That gives us an assessed value of $26,021. If there are any exemptions, we would apply those there. And then we have a net assessed value of $26,021. And that's the basis for the tax calculation. So property taxes are the limited net assessed value divided by 100 times that tax rate. That's all we do for each individual one of these to determine how much that property tax is. It's pretty simple. So for the county primary, it's going to be 26,021. I put that one right up here, divided by 100 times their tax rate, and that's their amount. And you can do that same formula for each one of those. So that's kind of a common call that people call and say, well, how are the taxes even calculated? And if this is more than you wanted to hear, I just wanted to make sure for those of you who like math like I do, you at least have the ability to see this. You can take this home, show it to your friends and family. They'll love it. You can have like a game night, have people over, they'll love it. So The one variable about this that's a little bit different, and that we talked about the primary, non-primary. The second one down is the Vail 20 PRI. That's the Vail School District primary tax. And this is from a property close by here, a residential property. And they have a Vail School District primary tax of $504.32. And you see over here, they have this primary tax reduction of $406. That's their benefit for being a primary residence. If they were not a primary residence, they would not get that $406 and they would pay that much more school district tax. So the math is a little bit different when we're doing a school district primary tax. So it's the same philosophy where it's the limited net assessed value, that $26,021 divided by 100 times the school district tax rate. I think Vail's up there is 3.4987. That gives us $910.40. That's for a non-primary residence. So if you are not an owner occupied, you don't live in the home, that's the amount you pay to the school district. If you are a primary resident and you live in that home, we're going to do a second calculation, and we're going to use a rate that is determined every year that determines how much credit or rebate or reduction that you get. So we do a second calculation to come up with the $406.08 that you will pay less in school district primary tax. Everything else on there is just going to be the standard thing. But for school district, for primary, non-primary, there's that extra calculation that we do. If you look at your tax bill and you have an amount where it says primary tax reduction that's greater than 0, we have you as a primary residence. If you have a 0 there, you're not indicated as a primary residence. And if you are, you need to make sure you reach out and let somebody know. Okay, next one. Yes. Yes. Well, so that pie chart includes the total levy, which does not take into account the reduced amount of property tax for a primary residence pays the school. The school still gets that money. So we don't charge the property owner, but the state of Arizona pays that money. So the school district levies that tax. We reduce that amount off the property owner's tax bill. And then I send a report to the Arizona Department of Revenue that says, here's how much of this money you need to make the school district whole. For 2025, it was about $85 million that the state of Arizona paid to the various school districts in state aid refunds back to them. So they're still getting their whole money. So from a holistic levy standpoint, the percentages are like that. So, okay, I think we're almost done. This one, what can affect your property taxes? So I tried to put together a few things that just maybe to think about that can affect your property taxes. Primary or non-primary residence. We just talked about that one. That's pretty easy. You pay a little bit less in the school district tax if you're a primary residence versus if you're not. If you're not sure if you are, please contact one of us. We'll be happy to look it up. Any of these people up here can look up your property, and you can look it up on any of our websites and see that as well. Property value used to calculate the tax rates. The property value is the starting point of a property tax calculation. So as that property value may go up or down, that could affect your property taxes. So, the assessor's office is going to give you an opportunity every year to review that. They're going to send you a notice of value. That's the time you need to be an advocate for yourself. Look at that notice. And if you have any questions, concerns, there's an appeal period. You can file an appeal. You can call and ask questions. But once that comes to me, then we're going to be doing the math on it. So third one, property improvements, like additions. Not maybe super common, but people do additions to their property. They might add on a bedroom or build a detached garage or something. Those are things that can affect the property taxes. That's going to increase generally the value of the property. So something to keep in mind. I've had plenty of calls from people say, man, my tax bill went up 30%. I look up and I see the notes on the assessor site. They added 1,000 square feet and an RV garage and a pool, and they can't, for the life of them, figure out why their property taxes went up. But maybe people don't think about that. So, the county assessor is listing the improvements that are on that property, the characteristics, and they're going to use those characteristics to determine their value. So something to keep in mind. Splits and combos, not something you're going to run across too much if you're just on your residential lot with your house. But if you have a house and you have some land next door and it's all one parcel and you think, I'm going to split that half an acre off and sell it to somebody, that can really influence your property value. I don't want to get deep into the math on it, but it basically allows the recalculation of your taxable value when there's any kind of parcel splitting or combining. So if you're ever in that situation, you might want to ask some questions. You can reach out to the tax group, reach out to the assessor. We get calls like that where people say, hey, what's this going to do? And we do have some ways where we can kind of help troubleshoot that for you and see if there's any scenarios that might be problematic for you. Exemptions or senior valuation freeze. Arizona has several personal exemptions. Widow, widower, we have 100% disabled. We have partial disabled for veterans. There's a new one that came online for veterans that have 100% service-connected disability. Those things are going to affect property tax. Whether that exemption is coming on the property or going off a property, those things are going to affect property tax. So the senior freeze program, that's something for folks that are 65 or older. If you meet certain criteria, you can get the taxable value on your property frozen. And so that's the basis for property taxes, the limited property value. So that's popular in the 65 plus community. The programs in Arizona do have some, generally some of them, they have income restrictions or things like that. So the legislature kind of wrote those for specific folks, but those kind of things can affect the property taxes. We get calls from people that say my neighbor's taxes are lower than mine. I look it up, they have an exemption or they have a freeze or something. So keep things in mind if you're comparing tax bills with your neighbor. The value of the property might be different. They might have some exemption or some freeze in place or some program that's suppressing those taxes. So okay, school district propositions. You guys have all got those things in the mail where the school districts say, hey, we want an override, or we want to issue bonds. The one I can think of that's coming up in November, TUSD has one, Tucson Unified School District. They want to do an override to their maintenance and operation levy. And I think their pamphlet said it was about $1.02 of additional tax rate. And so that's something to keep in mind as you get that. That's going to affect the amount of property tax you pay. Depending on the value of your house, it might be a few $100 a year. It might be $400 or $500 a year. Usually they have some examples in there, but every year there's generally some type of propositions for the school districts. Now, many of those are just to continue an existing tax levy that has already been authorized in previous years. And maybe it's coming up to be expired and they want the voters to approve them just to continue that. So not necessarily a new tax on your bill. The one for TUSD is a new item that they are requesting that would be an increase to something that you were previously seeing. So just something to keep in mind as you see those things in the mail. Obviously the schools need money. I don't think too many people think that the schools are overfunded. I'm not an expert on school finance, but they wouldn't be asking for this if they didn't need the money. So, okay, lastly, changes to tax laws. Our legislature meets every year starting in January, and they do a variety of laws, and there are tax laws involved in there, and we try to monitor that and keep track of that. But there are times when things are done in our legislature that can affect your property tax bill. Generally, if it's something going to hit a homeowner, you'll probably see it in the newspaper. But those are just other things that you can keep an eye out for. All right, I've talked enough. We're going to leave you with our resources and contact information for whoever of you that are, yes, go ahead. Yeah, no, I've heard that one. I've gotten that. I've had thousands of questions and I've heard that one. I don't know what the calculation and all the statutory stuff for property taxes is determined by our legislature and is in our revised statutes. So, the school is getting the same money. I think this benefit is similar in other states. If any of you have ever lived in other states, a lot of times they call it the homestead exemption. But there is generally in a lot of states, there is a benefit of being a primary residence. I don't know what the the logic is behind it, why it's, hey, if you're a primary residence, you're going to pay less to the school district. They're still getting the money, just the state of Arizona is paying it for them. But that's the way they set it up. I don't know the origins of that whole thing as to speak as to what the logic was behind it. But you make a good point. Correct. Probably my most common phone call during tax bill season is the people that want a benefit for property tax. Property taxes don't necessarily have a direct benefit. Very few taxes have a direct benefit. The only one I can think of is generally the fire district. If your house catches on fire, they're going to come put it out and you're not going to get a bill. But school district, unless you have kids going to school, not necessarily a direct benefit. There's indirect benefits. We're obviously educating our society. We have a library district tax. I haven't been in a library in 20 years, but that's just, that's the way it is. We have to pay for the libraries. So there's a lot of taxes that do not have a direct benefit. Most of them do not. Yeah, so a quick overview of that. So on a tax bill, your first line item is always going to be Pima County primary. Okay, that's the county's main property tax that funds the operations of the county. Now they have other revenue sources. They get share of state sales tax. They get other revenues. That's one of their larger revenue sources. And that is going into the county's general fund. And that's going to fund a lot of these departments that you mentioned, the Parks and Rec and the Health Department. A lot of county departments don't generate revenue. The county assessor's office doesn't generate revenue. The county has to fund us because we don't generate revenue. Some departments do. Developmental services, they charge a fee when you apply for a building permit. But when you think about that, 38% was everything. So the Pima County primary tax, which is most of the tax you pay to Pima County, largely speaking, that funds the operations of Pima County and their different departments and everything. The library district tax, obviously by definition, pays for the library, funds the library district. I think we have 20 some libraries in the county. Flood control, they have a district that pays for their flood improvements. Those are smaller taxes. The county's tax rate is $4 or so. Those districts are like 30-40 cents. Yeah, so, all right. So we've got our contact information up here. We have a property tax helpline. We answer it, no matter if you want to complain or not, we're still going to answer it. And you're welcome to vent to us at any time. We will give you all kinds of helpful information. We have an email account as well, and we have a property tax page on the Pima County's website. So if you ever have questions about property taxes, you get your bill, anything property tax related, please give us a call. We have people that will help you out, answer your questions. The assessor's office contact information is right up here in the middle. And then we've got some contact information for their valuation relief programs if you or any of your friends or family fall in that scenario. So thank you again for having us and listening to property taxes for 20 minutes. And our county treasurer is going to talk to you about everything that happens after this. So
thank you very much.
The top one. Probably didn't need the microphone for that. Oh, I can do it. All right. Well, thank you, Eric. Thanks for getting everybody amped up and excited about property tax. All right, let's get into it. So for starters, of course, the treasurer's office and the assessor's office, they're two very distinct things, but they both play very important roles in the assessment and collection of property tax. So where the treasurer's office comes in is the treasurer's office is the department that actually goes out, collects the tax, makes sure you pay, sends delinquent notices, all that good jazz that you love. So we are responsible for efficiently collecting property taxes that are owed to all county governmental agencies, which of course the assessors discussed, right? We have school districts, courts, community college, fire districts, county controlled districts, all that. We are also responsible for managing county funds. So that means overseeing our entire investment portfolio. If there is a dollar that runs through your county government, it has to run through our department. So we're responsible for county managing payroll funds, accounting for funds, make sure we are meeting statutory obligations and financial operations. We also function as the statutory bank for the county and all county controlled districts, as well as schools. We also deal in revenue distribution. So of course, once we collect the taxes, we hold, we invest, but we also distribute those to certain districts. And then of course, we are transparent, we maintain accountability and make sure all the money goes where it is supposed to go. So the property tax levy for the tax year 2024, our real property levy. So the total taxable value for Pima County is $10,842,798,446. And the real property levy is $1,489,539,408.90. Cannot forget the 90 cents. Okay, so the personal property levy, these are things like business personal property and manufactured homes. Real property are land parcels and affixed homes. So the total taxable value for the personal property levy, $680,702,221. And then the personal property tax levy is $44,621,475.84, which makes a combined total levy of $1,534,160,884.34. So in terms of tax collections, our total taxes collected for the 2024 tax year, we just recently got into the 2025 tax year. So far for 2024, we have collected $1,426,384,541.63. By the end of this, you guys are so going to love the sound of my voice reading you numbers. So within Pima County, we have 98.1% of taxes billed on average, which is that number collected in the year due. Oh dear, I've caused a problem. There we go. And the standard average collection amount for the state of Arizona is 97% to 99%. So you can rest assured we are perfectly average. So taxable corrections are also an important part of the levy. Taxable corrections are changes. They can be increases or decreases in taxable value and tax amounts for different properties. They are initiated within the assessor's office. So the assessor's office, say, will receive an appeal. They adjust the value of a property. They notify us, and we adjust the amount that we collect accordingly. So the total taxable corrections process from July 1st of 2024 through June 30th of 2025, there were 4,011 taxable corrections for a net adjustment of $4,736,606.29. In terms of delinquent taxes, so currently Pima County has outstanding for tax year 2024 as of June 30th of 2025, $23,438,793.21 outstanding. And the 2024 delinquent real property taxes for 2024 will be subject to a tax lien sale in February of 2026, if not paid in full by then. All right, so I will go ahead and turn it over to Catherine Micronis, who's going to discuss the way that these taxes benefit our school districts.
Thank you. As a school board member, I have a real passion for public education, so this was really important to me to be the one to share this with you. So every day, every school day, kids walk into the classroom and they need lights, the bus is running, teachers paid, and supplies ready. Behind the scenes, the treasurer's office plays a key role in making sure this happens. We collect and distribute property tax revenue for 17 school districts across the county. That means that we make sure the money goes where it needs to go quickly and accurately so schools can concentrate on teaching and learning and not on paperwork. We also act as a kind of bank and investment partner for most districts. When schools have funds sitting idly, we invest those dollars safely to bring in a little extra revenue, stretching taxpayer dollars further. And when schools need to build new classrooms or facilities through bonds, and most of you might not know this, but out here in your community in Marana with all the building that we have going, our districts won't qualify for the school facility boards to contribute to help build schools. So they have to come to the voters and ask for bonds when they need new schools. Our office manages those repayments responsibly, protecting districts' credit ratings and ensuring taxpayers' commitments are honored. And then our commitment to the school districts is that we will be transparent and compliant. We will provide access to all financial reports and enable the districts to reconcile as mandated by our revised statutes. We handle day-to-day transactions like deposits and disbursements, and we constantly are working to modernize our system to keep everything safe, secure, and transparent. Yep, that's everything there. And then here's another graph like what you've already seen, and you'll notice the same distribution with the Vail School District receiving the 39% of the money that we collect. But that's a breakdown of your local, how it's distributed. So at the end of the day, our role in the treasurer's office is simple. We safeguard taxpayers' dollars and make sure they work for our kids, our schools, and our communities. When we do our job well, schools can focus on students, parents can trust the system, and together we can build a stronger future for Pima County.
Thank you, Catherine. So let me finish up here. As your county treasurer, my main responsibility is to be a steward of the public trust. And my commitment is pretty simple. It's to secure your funds and to strategically grow them in a way that directly contributes to the prosperity, equity, and sustainability of Pima County. The goals for my first term are built upon two main pillars: responsible investment and organizational integrity. Our investment policy will not chase the highest interest rate. It will be a tool for economic and social growth, fundamentally aligned with the Pima County Prosperity Initiative. First, we will utilize short-term interest-bearing deposit accounts with local banks. This ensures that the capital remains in our community, empowering local banks to make critical loans to small businesses and local companies. These are the engines of our economy, and by investing in them, we are helping to provide significant employment opportunities right here in Pima County. Second, we are entering a new era of ethical investing. We will initiate a strategic divestment from fossil fuel producing corporations and redirect those resources into sustainable options, specifically green bonds. This move isn't just environmental, it's financially prudent, recognizing the future direction of the global economy and while providing stable, ethical returns. Third, we will support equitable economic growth by investing in corporate bonds with companies that demonstrate strong governance structures, emphasizing diversity, equity, and inclusion. We believe that organizations with broad perspectives are better run and more resilient, making them a safe and responsible choice for the public's money. Our investment decisions will therefore reflect the values of our diverse community. A modern ethical investment strategy requires a modern ethical office. My second pillar is focused on revolutionizing the internal workings of the Treasurer's Office to guarantee both safety and efficiency. The first step is establishing a culture that promotes integrity, transparency, and ethical behavior in the workplace. This means fostering an environment where every employee is encouraged to promote collaboration in solving problems and is personally invested in serving you, the public. Furthermore, we must create an organizational structure where strict internal controls are not merely suggested, but enforced, ensuring the absolute safety of public monies. The security of your tax dollars is not negotiable. Finally, we must step into the digital age. The Treasurer's Office currently operates on an outdated systems that hinder efficiency. We are planning to migrate our current Oracle database platform to Microsoft SQL so we can remain compatible with the county's central IT, with the Recorder's Office, the Superintendent of Schools, and with the Assessor. And this change will enhance efficiencies across multiple county departments. Concurrently, we will retool the Treasurer's cash management system to integrate as much as possible with the bank and the counties and the school district's ERP systems. The goal is automation, speed, and accuracy. The modernization effort culminates in providing more robust reporting tools, offering real-time data access and accountability to the public and to our partners, embodying our commitment to transparency. So this is my vision: a modernized, ethical, grounded, and locally focused Treasurer's Office. And we will keep your money safe, grow it responsibly, and use it to power directly to build a more prosperous, sustainable, and equitable Pima County. Yes. It's extremely healthy. In other words, we, like Eric Howard just had explained to you, all of the taxing jurisdictions levy the money that they need, okay? And that's what you then pay in property taxes. And because we don't need it right that minute that we collect it, we invest it. And we have about $1.6 billion currently invested, bearing interest. So that money, that interest money, which we redistribute out to all of the taxing districts, is sort of like their extra money that they get to have to be able to provide service. And we're very healthy financially.
I think some of this may be back from at a point the state was sending out less road repair money. When Vail was looking at incorporating out here, we were comparing to Swarita. Swarita Road funds were in the red, and they were having to pull from their general fund. So that was a negative on their balance, and that would have affected Pima Road maintenance also.
Right. Okay. So just so you understand, and I think Eric did a great job of explaining it. The assessor assesses the value. Eric's group puts together your property tax bill, and then we manage the money from there after we collect it. We do not determine how that money is spent. That money is spent either, for example, if it's the school district, it's the governing boards, like Catherine is a member of the Marana Unified School District Governing Board. The county is, money is determined by the County Board of Supervisors. So when you have road issues, you need to talk to your county supervisor. I believe that's Supervisor Christie here. So these are, we basically manage the funds. We don't determine how much the levy is. We only collect it, and we make sure that the money is kept safe and we can grow those monies in an equitable fashion. Yeah.
And also recently, I read that there was an accounting error that took place. It was in the local Arizona papers,
Right.
Tucson papers. Did that result in either a deficit or a credit to any Pima accounts?
Okay. I will try to explain that. Okay, so shortly after, well, not really shortly, about 5 months after I took office, we have internally about 38,000 accounts. And there was one account, which is what in accounting terms is called the suspense account. It's supposed to be a temporary place to put money until you can go and figure out where it actually belongs. We discovered one of those accounts was negative $1.6 million. And then over the following 2 months, we tracked down what that $1.6 million was. It was an overpayment of interest to all the taxing districts from our investments. And the reason the overpayment occurred between 2019 and 2021 was because of an accounting error, basically a misplaced decimal point. And it was, it resulted in that deficit. And now we are recouping that money, but that money is coming out back to balance that account, is only coming from the interest that's earned. So it's not going to create any negative impact on any of the districts.
We have any other questions for any of our panelists tonight? Come on, crowd, you're usually full of questions here. Okay.
Yeah. Yes. It's under process. For example, like I said, we are going to divest from fossil fuels. We do, I'm not going to take a loss, that would be imprudent, but we do have, like, for example, a corporate bond that matures in November. And when that matures, that's fine. We're done with it, and then we'll reinvest that money, like I was saying, in green bonds and so on. This is going to be a process going to have to come over time, because most of the maturities on the bonds that we invest in are typically anywhere from 2 to 5 years. 5 years is the maximum we're allowed by law. So this is an ongoing process.
Okay. Well, quick one. This property improvements, and I'm thinking, I lost track of who that was. Solar panels, are they considered a property improvement? And if so, how do you figure out the value, given there's so many different economic models?
So right now, solar panels that would be considered personal property. Are you talking residential, or are you talking the large, are you talking
The
like
big
the
ones,
large?
rooftop panels. Yeah.
Just residential ones.
Residential.
So those are considered personal property. I don't know that we really pick those up on the personal property roll right now.
I think from an assessment standpoint, your residential rooftop solar is not factored into the valuation on there. There are, you know, big commercial type solar stuff. There's some statutory stuff for commercial solar.
Yeah, I guess as far as like residential values go and as far as characteristics, there's all of those that are put into a model. So it's not going to be any one specific thing that is going to add any significant amount of value to your house.
Hi, I have a question, and thank you for your presentation. It was very informative. In terms of a request to have your property value reassessed, when is the time frame for that?
You can call our office anytime and say, hey, I want you to take a look at that. So we do reassess every year. The lien date is January 1st. And then again, we send out that notice shortly thereafter, February by March 1st. That's a great time for you to look at that. But at any point in the year, if you have any concern about your property, please give us a call.
I have a question regarding federal funds coming into Pima County. And has there been any disruption in federal funds coming into Pima County? And is that going to cause us any issues?
Yes, there has been mostly the funds that come in, federal funds that come in are primarily we collect from the federal government that come into us are for the schools. And some of those are being reduced right now. And there's also other federal funds that have been, or grant money is essentially what it is. It's federal grant money that is not existent anymore. That's going to impact the budgets for our taxing districts. And I believe that the Board of Supervisors is this year for the, basically went and raised the primary rate to accommodate the loss of money from some of that federal grant money, that especially for affordable housing.
I'd also like to thank you guys. It's very informative. I'm just wondering, is there a potential downside to having your home's value looked at? If you think you're overvalued, overvalued, and then someone else thinks it's undervalued.
The potential downside, I guess, did you add 1,000 square feet? Because that potentially, I don't know that there's necessarily a downside, because again, the idea is that you want to be fair and equitable. We want to be paying our fair share. And at the end of the day, we're always canvassing. We'll never go back and penalize you. So if you built that addition like 5 years ago, we're not going to go back and tax you those last 5 years. But I think, we want to be able to bring in as much revenue so that one person isn't being burdened more than the other. And the more we have on the tax roll, the smaller our individual burdens are. So I think, depends on how you look at it.
Do you ever look at permits to, or survey permits to see what's going on in neighborhoods?
Is definitely one way that our field crew and our real property department generates a lot of our work, actually. So we, different jurisdictions, so the city of Tucson, Oro Valley, Marana, we get permit reports on very regular basis. So daily, our field appraisers are taking those permits and going out and doing field checks and making sure that we have the improvements, picking them up and making sure that they're accurate.
What might be the basis for challenging an assessment, or what are common?
Well, if you look at your property and you decide, I don't think my house is worth this much. I don't think it can sell for this much. I've looked at sales and I don't think that it's correct. The advantage would be that if, we look at it and we're like, hey, you're absolutely right. There's something on here, because again, this is mass appraisal and we're not looking at we do our best to make sure everything's, done accurately, but at times that's not necessarily possible. So it gives an opportunity for us to look at that. We may agree with you. And if you get that lowered and it affects that limited value, then potentially that would potentially have an impact on your tax. That is what you appeal, would be the full cash value of the market value. But again, if we have characteristics listed wrong, that may affect your value. If we, we have it as a 2,600 square foot home and you're like, sorry, this is only 2,300 square feet. When we determine, yeah, no, that's correct. That will lower, potentially lower that value.
Testing. Perfect. So to add on what Chief Deputy Otto said, we do go based off of sales comparables. If you visit our website at asr.pima.gov, on the main landing page, you're able to look for your property, either by ownership name or the property address or parcel number if you know it. And then when it takes you to your individual parcel detail page, there's a tab at the very top that says sales comparables. That shows you all properties that we used to value your property. You're also able to look around and see the values of properties that we didn't necessarily use, and you're welcome to utilize that tool to help appeal your property value. If you have any questions or you need help using that tool, please contact our office. We're happy to help.
You say that you don't assess money if someone like built a house or in addition to a house over 5 years. But what if you have made an incorrect assessment and your payment should have been lower? Will you be doing that?
If we find something like on our own, through our own valuation process, if we determine we've missed something, yes. We can either fix it going forward, or depending on the time of the year, we can actually issue a notice of claim depending on the circumstance, and that will correct if you were the owner the current year plus 3 prior, assuming that was the error at that time.
Do we have any other, oh, that's loud. Do we have any other questions? Okay, I'd like to thank all our speakers. And I'd like to thank everybody who helps put this on: Karen, Mike, Ian, Anna, Martha, Tom. They all have a piece in putting these presentations together. We have a couple of announcements. I think most everybody's aware of October 18th. No King's Day rallies. They're going to be all over Tucson. There's going to be one in downtown Vail. It's listed at 9 to 10. People are probably going to show up at 8:30 and be there till about 11. On November 1st here, there will be a voter registration training. Staff from the Pima County Recorder's Office will be coming out to do in-person registration training. And I believe George from LD 19 wanted to make a quick announcement.
Use mic, or I can just talk. I can do both.
Use a mic.
Hello there. My name is George McGaffey. I'm the chair of LD 19. Well, why is LD 19 here? We just recently discovered parts of Vail are in LD 19. So, however, parts of it are not. Go to recorder.pima.gov and double check for 2 reasons. There were 33,000 people removed from the voter rolls this year. Check to make sure your name was not one of them. You might accidentally happen. Also, while you're there, you can check to see what precinct you're in, what legislative district you're in, what congressional district you're in, because those are all important. I'm also here to recruit PCs. PCs are precinct committee people. That is the grassroots of the Democratic Party. I have applications and descriptions in the back, and I'd like to come back another time and talk about that more in detail. But I want to share this good news with you. LD 19 is putting up a sign on I-10 just east of Houghton Road. So watch for it. It goes up November the 4th. It is about Siscamani and all the things he has done to change the way Pima County and other parts of the state are getting funded. So please watch for that. Come and see me in the back and I'll give you the information on becoming a PC.
Okay. You realize theoretically this is a nonpartisan club. although we do tend to lean one way or the other, but it's true. I think most everybody here does live in LD 17. You can find out what all of your districts are, and that's important to know. When I spoke to the recorder's office, they said that all the letters have been sent out for the people who were inadvertently removed from the rolls because of not providing citizenship proof when they registered through motor vehicles. But it sure doesn't hurt to check. If there isn't anything else, does anybody else have any announcements they'd like to share? Karen?
Yes, our next meeting will be on November 13th. And we are planning to have Teresa Ruiz, who is a candidate for Superintendent of Public Education. So we hope to see you all next month.
Everybody go out, stay dry this weekend. We're supposed to have some bad weather. If you see a wash, turn around, don't drown.